Let's talk to the founder and CEO of Carvana. Ernie Garcia joins us in a first on CNBC interview. It's great to have you, Ernie. You know, it's hard to believe that this was a company we were talking about on the brink of bankruptcy not too long ago, end of 2022? How have you turned it around so fast?
Well, I think the first thing I got to do is I got to really thank the team. I mean, 2 years ago, as you said, we were in a tougher spot than we are today, and we knew that we had a comeback in front of us, but we knew there was a lot of work to do. And I think the way the team came together and didn't wait for that to happen, but forced it to happen was really incredible, and it's something that we will be forever grateful for. So to the entire team at Carvana, thank you guys so much. I think our results this quarter were the best we've ever had in our history. I think financially that's true, but I think more importantly, the implications for the future, that's true. I think we're in a great position, and we've got a huge runway in front of us, and so now we just got to go attack that.
So on the profitability, because that was really a bright spot, especially for analysts and investors, gross profit per unit beating estimates, EBITDA was nearly 2 times above consensus, and guidance calls for more growth. So how are you driving revenue growth, but also here obviously prioritizing the profitability story?
Sure. Well, I think there's 2 things that are, I think, the most important to building a great business over time. One is you've got to have an offering that is differentiated, that customers love, that's hard to replicate. And I think we've built that over the last 11 years. It's been a ton of work, but I think we've laid the foundation for that, and I think we're in a great spot there. And then I think number 2, you have to have great people that are builders that come in every day and try to make things better. And I think when you have builders, you're not necessarily making trade-offs between growth and profitability. You're finding new creative ways to do both, and I think that's what the team's done. And so now we just got to keep doing that, but we're in a great spot, and we're really excited.
But what specifically is driving the growth? Because it's not exactly a growth market right now, used car industry, is it?
So I think, from 2013 to 2021, we grew at very fast rates. The last kind of pre-COVID year of 2019, we grew at 100%. And I think that growth was driven by 2 major forces. I think one was just consumers shifting their preferences to wanting to buy cars online in a simpler way. And that was a continual shift in our direction. I think 2 was we were always benefiting from positive feedback. As we grew our business and grew our inventory, customers had more selection, and that drove a lot of growth. And then I think in 22 and 23, that went the other way. Car prices went up, rates went up, affordability was worse, and we were suffering from some negative feedback. And I think we're now back in a spot where we're not yet benefiting from positive feedback, but I think we're seeing consumers come back as we've just kind of stabilized, and we have relatively flat inventory and relatively flat marketing spend. And in a stable environment, I think Carvana is positioned to do very well.
Ernie, it's David. It's just fascinating to watch this, in part because there was such an opportunity, frankly, for people to have made an enormous amount of money if they'd been brave enough to step into your shares not that long ago. And again, as Sarah said at the outset, there were talks of bankruptcy and the like. What do you believe was sort of the turning point for you? And, not just in the business, but also putting your financial house in order. Was it when Apollo came in? Was there something else that you could point to? I'm just curious because it can be kind of a helpful lesson for people in the future.
Well, I think reality is complicated and narratives are simple, and simple narratives can turn quick. And so in 2021, the narrative was, we had an incredible runway in front of us, and we were going to build a big company. And in 2022, when things didn't go our way, the narrative switched to, we were in a zero interest rate phenomenon, and we were only able to grow by giving customers deals that we couldn't support with the economics of the business in the long run. And I think the major turning point was people inside Carvana saying that narrative shift isn't right. And it's okay that the world out there is going to tell that story. That's not something we're in control of. What we are in control of is we're in control of how the business actually performs. And so we put together, plans that we've been running for the last 2 years that have required a ton of work from a ton of people that were dedicated, that cared, that came in every day and fought. And they've made a ton of progress. And that was the real turning point. I think along the way, there were some more notable, moments that were visible from the outside. But I think the most important things were things that were happening internally and what the team was doing.